Ladies and gentlemen, K Kim here. Welcome to the market update. Hope you guys had a good day trading today. Hope you guys had a good week this week. It looks like market is up today. As you can see here, we got S&P up about 0.3%. Today, actually, it was led by the small caps. And again, we've been talking about this week that sector rotations occurring, and I like to see this more often going into maybe remainder of this year. So you can see today we did see Nasdaq lagging, while the small caps and then the Dow and the banks, and also I think transport's up quite a bit today. Obviously, you can see the year-to-date numbers here, right? The year-to-date numbers, you can see that S&P is 10% year-to-date. Nasdaq is a monster number there, 35%. I think like semiconductors up there with the Nasdaq, like 37% year-to-date. Dow and the Russell, they are hitting positive so far year-to-date. They were also heavily, lagged, but they are coming positive here. And you can see the banks is now negative 13 or 14. At one point this was negative like 25% or something like that, just about a month ago or so now. Making some progress here, so we want to flip this positive. I'm not sure if we're going to get there before the year ends, and there's a possibility we could on the banks. Just the banks been holding up really well this week after a huge gap up we saw on Monday. You saw banks up 10%, and that's a huge day. I mean, any sector to be, just one sector to be up like 10% in one day on the bullish side, that's a huge update, and we've been kind of holding up on the banks. So we'll cover all of that. So I think at this point, we saw that market is after saw some fluctuations in the last couple months here, and market is getting back up, hitting some of these all-time highs level again on the S&P. I think the question is then, can this market continue on and finally resume with this primary term uptrend? Because a lot of work that was done this year was to recover from this COVID massacre, right? It took about 4 or 5 months to get back, and some volatility along the way, and that's a pretty normal price action. Especially you see 60-70% move in just 4 or 5 months, right? Nasdaq went up 80% in 4 or 5 months. So with some huge gains, or known as the fastest recovery ever after seeing some steep decline. So that's what we're trying to figure out in this video today is, can this market continue on, right, remainder this year and even possibly next year? We're trying to figure that out. It is all coming up right now. So let's actually follow up on the 65-minute chart first, which we've been talking about on the daily update videos this week, right? We'll follow up on this, and then we'll talk about it, and then I'll come back to the daily chart. We'll look at things more of a bigger picture here. So we've been following this rising pivot, right? I've been doing this out yesterday. You can see that's what I call rising pivot, because it was prior resistance, and then it flipped prior support, and then it was support again, and then it became support again. So definitely have some weight to this rising pivot, right? We can say that it has some nice resume, because every time we hit that level, we saw price fluctuation, right? So once we stayed above it though, right, as you can see here and here, once the price stayed above that rising pivot, it seems that market likes to bounce from it. Dip buyers like to come at that level, push the market back up. So yesterday we talked about how, best case scenario for the buyers is gapping up above my short-term moving average and holding up for 2 hours. Specifically, that's kind of what I talked about here. And so it looks like we actually did see a gap up above my short-term moving average, and we held up 2 hours above my short-term moving average. And with that, in that process, what happened was it allowed the price allowed my short-term moving average to what? Start to curl back up, right? Because we are rising. We're no longer in a downing or declining phase in my short-term moving average. We're now rising here. So what happened was we saw the gap up and we moved sideways for 2 hours, but that's a good thing, letting the short-term moving average to catch up, and that's why there was some volatility. On the second hour, we came down, retest my short-term moving average. Dip buyer showed up, bring it back up there, and on the third hour, that's a micro-term pivot there. Third hour, we broke above their resistance, right? And then on the fourth hour, that was it. So once the battle was won here, right? After the gap up was crucial, right? So I think after the gap up, the question was, well, are we gonna see a fade after gap up and filling this gap, or are we gonna hold? I think once we held for 2 hours and we saw that price coming down, hitting my short-term moving average and acting as support, and I think on the third hour when we broke above that short-term, micro-term resistance, thrusted above it, and that was it. I think right at that point for the day, right? For the day, buyers have gained control. And after that, we got the 4th hour rally, 5th hour rally, 6th hour rally, and continue to move higher. Looks like they pushed it a little further, but came back down. So with that move, we no longer have lower high any longer. So we kind of talked about that there's a lower high in the short to micro term, but we also talked about we didn't have a lower low, right? We have an equal low that favors the buyers, right? Bears desperately needed that lower low. We didn't get that, and bulls took advantage in that situation, gapped that up. We broke above this neckline, clearing above it, held above it. Looks like this became short to micro term double bottom, and now just kind of retesting that neckline phase there. So let's check out that oscillator. I'll come back to the daily chart here. So in the oscillator, we've been following the oscillator support here. So you can see the problem with what's going on right now with sellers is that sellers are not able to bring this oscillator all the way back down to the bottom of its span. The problem with that is for sellers is that once you let buyers elevate, and we've been tracking this since March lows. How many times have we seen it? We saw it back in June. We saw it back in September. You let my oscillator start elevated at the top, you know what happens. A lot of times we saw pretty strong rally that actually gets commenced after this signal here. So bears actually really needed to bring it down to the oversold level, or when we saw that lower higher, broke below it. But with that gap up, and that's what we talked about yesterday, what we needed to see was a gap up and hold above for 2 hours. Let this oscillator kind of catch up and made a move here. We broke above this neckline also. We're breaking out on the oscillator and all that momentum into the upside at this point, where buyers are not tired at all because they rested here. That's kind of what they did. They rested there, correcting through time rather than through price, right? And now you can see how fast that oscillator is expanding, and there's more room to be made, right? So buyers do have energy, and they can definitely push it up to new all-time highs next week. Let's go to daily chart here. So what we've been talking about in this daily chart. So now we're looking at more of a longer term perspective, looking at more of a, primary term really, right? So you can see if we look at a bigger picture, we've been talking about this support right here. That's that support, right? And that's the higher lows also. We got this support there, and those are higher lows also. And we got this support right there. Again, these are also higher lows. And that's kind of what we've been talking about all month of October, right? When this thing was coming down, we were trying to figure out, are the bears going to cultivate lower low, right? Or if the buyers can defend this level, that's still considered higher low, slightly higher low, but definitely still considered higher low. And we're using June price action as example that you see how this low never came lower than this low. So we were holding that rising support, cultivating higher lows, And with that, we're back at this level. And now at this point, as far as the long-term picture is concerned, more of a midterm, now we're looking at this chart here, more of a midterm picture, mid to long term, I guess. Now that we're up here, we clear above it, holding above this level here, the resistance there. We want to continue to give benefit of the doubt to the buyers in the short term, midterm, and long term, right? Obviously, man, market is going to have its ups and downs. It doesn't go straight up. I mean, you can look at here. There's some fluctuations. You can look at here, some fluctuation. You can look at here and some fluctuation. There's some fluctuations here. And there's a bigger corrections here and here and here and here, right? But this is why it's important to understand short-term sentiment, mid-term sentiment, long-term sentiment. And then once we see some of those sentiments change and shift, like let's say short-term sentiments start to change to bearish, which was happen here and here, we want to understand, okay, we do see that short-term weakness, but what about the midterm, right? And that helps you because then you don't go all of a sudden, oh my God, big crash is coming. Oh my God, big crash is coming, right? Instead of acting emotionally, you look at this objectively and say, you know what, we're still bullish in the midterm and long term, so I want to continue to give benefit of the doubt to the buyers, and you adjust your portfolio accordingly, especially the fact that my longer term moving average that you see here, it definitely did act as support. You can see the long-term moving average that you see here, right? I'll darken it a little bit so you can see a little better. Let me see here. So those long-term moving averages, I'll darken it a little bit there. And then we got this one, right? So you can see that, so long-term moving average, right? We got below my long-term moving average here. This was back in early March. Things got really difficult. And then we saw that rally in April. And then finally in June, we saw price surging above my long-term moving average right here. You see that? So what happened in that vicinity was that those long-term moving average was acting as a resistance. But once he blew through it, surged above it, and when we saw pullback, guess where it pulled back to? My long-term moving average. So my long-term moving average that once, I guess I have to say long-term moving averages because I got two of them here. The long-term moving average did act as resistance here and here. Now they act as support here. Guess what? In October, when this thing pulled back, that's where we found support there. You see my long-term moving average there? That's where we found support. It is no coincidence that we found support there, right? So we can say that those two long-term moving averages do have pretty impressive resonance. So as long as we the price continue to stay above my long-term moving averages, if you're a long-term investor and long-term trader, you want to continue to give benefit of the doubt to the buyers. I mean, market will make a move and it will kind of like to pull back and stuff like that. But as long as we stay above these moving averages, not only that, the moving average actually crossed back up. That's what we call golden cross, right? And that's a bullish signal overall when we see the moving averages crossing back up, right? So I think, once we saw the move, this market cultivating higher high here after the decline, I've said this many, many times. I said this back in September and October when there's a lot of things shaking and baking. A lot of people are getting really, really anxious, right? Especially the election coming up. A lot of people are talking about, crashes and Great Depression or whatever people are talking about, right? What we talked about was, when you see the market pulling back, I don't know, like we're talking steep corrections, 25%, 30%, 35%. It corrects 25, 30, 35%, and the market gets back up to makes new all-time highs, right? That in itself is higher high, correct? Yes, that's a higher high. So that's a COVID peak, and we cultivated higher high. So when that happens, we talked about how there has never been in the history of stock market where market came back down to the lows, to retest the lows, the major lows, or got into a bear market ever. That never happened. Not in the same year, not even probably next year. Maybe it happened 5 years later, something like that. Not in the same year, not even the next year, right? That's a statistical probability. Obviously, anything can happen, man. This is the market. This is life. Anything goes. But we have to make sure that we respect those probabilities, because that has never happened. If this was going to get into a bear market, actually, we would have never gone up here. We would have probably, and also, you see my long-term moving average, what it would have done up here, somewhere up here, we would have started coming back down and start cultivating lower highs and lower lows like this. If that would have happened with the lower highs here, that would have been, then you say, you know what, probably that truly was a bear market rally, this move, and now market is pulling back. Gotta start preparing for potentially a bear market, with that lower high. We never cultivated a lower high in the mid to long term. So right now what we're dealing with is on the spider. So where are we gonna go from here, right? That's a question, right? Can this market actually thrive remainder of this year and possibly next year? So we got this rising pivot / resistance there. So this resistance been acting as, it's pretty strong resistance, right? Here. Problem is, this one was actually 25% correction. That's a 35% correction. So it's a pretty lethal resistance for sure. Has a pretty weighty resume. However, something changed a little bit here. So when we hit that in September, instead of this thing, because again, that's a 25% and that's a 35%, we saw, what was that? That was a 10% or 12%? 10%. So it doesn't look like this 25 or 35, but we saw 10. And then we actually got up and then came down and got up again. A lot of people actually think that more time it hits the resistance, that resistance is going to actually be more strong. That's true in a downtrend. Okay, so if we're in a downtrend, and then let's say if this thing gets up here, and that's a resistance here, and let's say this thing keep hitting this multiple times, right? That's gonna come down. A higher probability. When we're in an uptrend, the resistance is going up. The more times it hits it, it has a higher probability of breaking out. Statistical probability suggests that we're probably in the process of breaking this resistance and then started to continue to cultivate primary term uptrend and move to the upside. So looking at things a longer term picture, I am favoring the buyers and the bulls, right? We analyze the short term also, looking at my 65-minute. I mean, we are, right now, as of today, gotta give benefit of the doubt to the buyers in the short term, mid term, and long term. But looking at more of a big picture going into this year and even next year, right? I want to favor the buyer. And that does not mean market is going to go straight up. We could see this thing going up to maybe 380 and then pulling back 15%, maybe go to 400 and pulling back 12%. I mean, there will be volatility, of course, right? We see these pullbacks. What I'm saying is, those pullbacks are usually there. When you favor the buyer, when the benefit of the doubt goes to buyers in the long term, those pullbacks are there usually to cultivate that higher low, right? So that's my analysis and that's my forecast. I am favoring the buyers remainder this year and next year. Let's go to Nasdaq. So Nasdaq's been lagging a little bit, but again, can you blame it? This thing went from here to here. That's an 80% move. Look at this thing. This was COVID. This is way up here, you know? And problem with a lot of people is, well, this is not going to end well. It's actually not true. If you go back, every time when the market faces a steep decline and makes new all-time highs, maybe it will grind, move sideways or something like that. Maybe, some volatility at the top. But after some resting pattern, right, after some consolidation, they tend to resume to the upside. Statistical probability suggests that even on the Nasdaq, yes, it is extending. This is a reason why we see Nasdaq slowing down, letting others to catch up. So a little bit different look here on the Nasdaq compared to S&P, because S&P is trying to break out of this rising pivot Well, what the Nasdaq is actually doing is we broke above it and retesting phase. So we, as far as just chart is concerned, how the chart patterns look, this actually looks a little bit more bullish than that, or bullish than S&P, because we actually already cleared above it, and then now we're retesting, right, before making that move. So that resistance, right, the resistance now becoming what? Pivot. That's the difference when I say pivot. Pivot is not a pivot until the resistance becomes new support. That is a pivot. So now this is actually turning into a pivot, rising pivot. And a lot of times market will do something like this. And sometimes, you know, it will scare people out. Maybe it will do a little head fake where break below it slightly. People just get scared. Look at this double top, man. This thing is going to go just crash down. And the market actually, I've seen that a million times. That's why you never want to ignore that mid to long-term sentiment before you get too bearish on the market. You see what I mean? So again, on the Nasdaq, at the same time, I want to favor the buyers remainder this year and next year. However, I think Nasdaq is going to slow down a little bit. I think it's a little bit more wild card on the Nasdaq just because the Nasdaq had such a great gain this year. So as the funds rotate into the banks, into the small caps, into the industrials and transport, right? We might see some of these leaders possibly, they might either move sideways or pull back. So we'll look at these. I mean, you know, I give you guys this weekly analysis, long-term picture, but I wouldn't be surprised. I'm not saying I'm bearish. I am not bearish because, you know, on the Nasdaq or on any sector, but I won't be surprised if this thing start coming down, even breaking below it, just to create some panic before getting right back up. Should the market start moving sideways and start seeing some, you know, some kind of shenanigan down move or something like that, I wouldn't be surprised. It's going to create a whole lot of panic, break below it. They're going to look at this as a mother of all trap. They said the same thing, I don't know, back in 2016, back in 2013, and then create lots of panic, you know, let the retail traders and investors get scared out, get stopped out, making a move or something like that. So should something happen on the Nasdaq, just because some of the leaders maybe tank or something like that, I wouldn't be so quick to be bearish if this thing start breaking below it. Let's go to Dow. Dow's looking great because now Dow's not right at that new all-time high level, right? So that was, you know, lagging, not catching up to the S&P. Now we're cultivating near that new all-time highs there, right? So we can't say that, you know, we can't say here that this is still in bear market. No, we're not in a bear market at all. Bear market does not come where the market comes 35% and gets back up to new all-time highs, and then you expect this to come right back down. That has never happened in the stock market. That's probably not going to happen this year. You know, we'll see declines. Obviously, we've seen it here and here and here. And how many people got faked out on the Dow? And I think I said something like this probably going to happen. And I remember what I said to you guys many times. I never seen head and shoulder formation actually play out ever since 2012 and 13, because everybody looks at them. So if you looked at that, there's a left shoulder head, right shoulder, and broke the neckline. A lot of people closing out their longs here, maybe even going short. Man, you got, you know, it was a tough week last week and tough week this week because we saw monster gap up on Monday. That's why don't ever rely on these patterns that everybody talks about. You know, at one point I remember on Twitter, these thing called technical cheat sheet was going around. I told you guys, burn it. All those wedges, man, head and shoulders, it ain't gonna play out once everybody's still looking at them. You know what I mean? Like if you go around on YouTube, there are these like technical videos that gets millions of views, like the and some kind of like candlestick or something like that. Trust me, all those now quote unquote patterns and these signals that gets like millions of views. You watch that, you think you can make money out of that. You're in surprise because everybody's looking at them. Everybody's doing the same thing. Market is gonna make sure, because the market always fools the majority, right? So you gotta be careful of that. That's why it's very, very important you understand just overall sentiment, like short-term, mid-term, long-term, macro, secular, right? And not letting some of these quote-unquote patterns to conjecture. You speculate that just because we have this big head and shoulder formation, then Dow is going to tank. And market is love to do stuff like this. Like I said, more and more people pick up technical analysis nowadays. Everybody got charting software, right? So think about it. Everybody's looking at certain same things, and the rule hasn't changed since the inception of stock market. Market always follows the majority, so you have to continue to evolve. Something might have worked several years ago, maybe 4 or 5 years ago. It ain't gonna work anymore, and that's how you can go burned, because you thought, oh my god, I used to trade these setups all the time. Now it doesn't work, right? So again, big gap here, right? Unlike S&P, Dow, that big gap holding. We can zoom into it here. That's a big gap. And it held, right? Found support here. We gapped up today. We're holding. That's a higher high. We do not have a lower lows. So we want to continue to give benefit of doubt to the buyers. Also, Dow Jones Industrial Average here. I want to favor the buyers remainder of this year and next year, and that's a nice size gap up. And people always think that gaps must be filled. Look at this gap, never got filled. This is why tracking gaps also important. I've been doing this with you guys every single day since the March lows, tracking gaps, right? This is how you can also tell the strength of a move, is when these gaps left open. They don't get filled. They get retested here. We got closed in June, never got filled, man. This gap opened, this gap opened. This gap is actually bigger. This gap never got filled. 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 Hasn't filled. This big gap hasn't filled, right? And that when you see a lot of these gaps are unfilled, and you can also look at that as a positive sign, the strength of this market. Let's go to Russell 2000. So I made this into green. It's because we actually have kind of an island reversal, because you see that gap down. We actually gapped over it on Monday, right? There's that gap down. We gapped over it. So it's kind of a island reversal. It's kind of like this is perfect island reversal here. Right here, because that was a gap down. That's a textbook island reversal here. That's a gap down. That's a gap up. From that, we saw a big move to the upside, right? We also talked about Russell 2000's been faithfully cultivating higher highs. So even just looking at this price action with higher highs, you would want it to give benefit of the doubt to the buyers in the midterm, just on that fact, right? Not getting all crazy scared on these pullback, but understanding that, hey, you know what, this market's been creating higher high. That means a lot of times market pulls back to cultivate higher low, which he did here. We got the low here, higher low here, higher low here. What is the definition of option? Higher lows and higher highs. So I think, transitioning from looking at the market too closely, right? Because a lot of times, just the data that we're looking at like from here to here, we're looking at what? Like 8 months of data here, right? And again, I've been analyzing this market every single day with you guys on the daily update video since March lows. And you can see how slowly, as the more data that gets available, we start to understand more and more and more, right? But this market has been actually faithfully cultivating higher lows and start getting in an uptrend. I mean, we saw a big move and we kind of slowed down, but that's kind of given because we saw a fast move and then we slowed down a little bit and then finally we broke out of this pivot now. That's a strong pivot, right? Resistance here, here, here. We retested yesterday. This is the reason why when we saw a pullback, we didn't see this thing coming all the way back down to fill that gap, but we found support here and we gapped right back up today. So same here on the small caps, and small caps leading today, and I'm glad to see that, right? At one point, small cap was extremely lagging along with the banks. Small caps really caught up here, not too far from S&P. So again, on the small caps also, I want to continue to, for the remainder of this year and next year, you know, as of today with the data that is at hand, I want to favor the buyers and I want to be bullish in the long term and mid to long term. Let's go to the banks. So you saw that big gap up here, right? That's a big gap up from here to here. Again, 9-10% gap up on Monday. And what happened with that was you can see that that was a support resistance there, kind of like a symmetrical triangle pattern, right? A lot of people look at this as bearish type, right? Because they see this as maybe a big, some people look at this as a big, like, I don't know, bear flag or something like that, you know? That's why looking at it that way, you know, you're not being fair with the overall price action. You start to speculate and conjecture that it must do certain way. So I don't look at it like that. All it is, you know, market is, because actually left the bank sector been lagging, but you can see how though it's been lagging, these gaps still open. None of these gaps were filled, and it was faithfully actually cultivating higher lows also, right? We never really got into lower lows. We got some lower highs here, right? See that? But we never, but then we're finding support here. So it was more of a consolidation, not really a downtrend, right? And with the big gap up, now we got higher high. It's subtle, that's definitely a higher high. While all these gaps still remains open, and you can see there's strength in this move. Even though banks are lagging here today, man, I have to say that I think, I'm not sure if it's going to do it. I mean, there's a chance we could get back to all-time high level this year. We got like month and a half. There's a chance of that. But you'd be surprised how quickly sentiment can change, right? I've said the same thing 2 weeks ago prior to the election, that you'd be surprised how quickly that fear disappears and how quickly market looks bullish again. Because when you go through that downturn, it looks like this market has way, way more downside to go. This market is never going back up again. You start hearing all these negative news they're pumping out, and you start fearing about the market. And then all of a sudden you realize you don't even know what happened, and you're just kind of wondering what the market is going to do. We're up here 360. When it was at 320 just a week ago, and you're like, okay, I missed out my entry again, right? It's because when we start to see the market turning down, that's when you actually start to look for, you start to strategize then. But what a lot of people do is they want to see some kind of quote-unquote confirmation, because in reality, there's no such thing as a real confirmation when it comes to the market. Who can give you full confirmation? You know, like it's guarantee thing. Once this happened, this is confirmed the market is going to do this. No, it's all probability game, right? So nobody can really give you that confirmation. So what I like to do is and obviously because I'm a long-term investor, I've been a long-term investor since 2016 lows on S&P when Spider was at 180. People were saying all kinds of stuff at 180. We're at 360 now. People are saying all kinds of stuff at 360. Well, when Spider was at 250, everybody was saying all kinds of stuff, right? There's always somebody somewhere saying all kinds of stuff. So you got to come up with your own strategy that it works for you. But I would suggest that, if you are bullish in this market in the long term, you want to start strategizing when the market actually pulls back. It's actually easier said than done, right? Because of fear grips in, that you get emotional and stuff like that. And another thing that I can tell you is never trying to find the perfect bottom. That's how most people miss out on the move. Whenever you're trying to find the perfect bottom, perfect low, a lot of times you're going to miss your entry. I bet a lot of people, almost everybody, even when I go through Twitter, a lot of people, even these guys on Twitter with 10,000, 100,000 followers, most of them thought that we're going to undercut the September low. We're going to get below it. I think a lot of people are looking at 300, and probably 310 is what a lot of people are looking at, right? Maybe even you are. 300, 310. This is probably the level that everybody was looking at. I'm pretty sure, right? Something that I taught you guys before is that market likes to bounce early or late. It bounces early when it realizes that a lot of people are looking for something, right? So this time I believe it bounced early. It bounced early in June too. A lot of people are looking at further decline. We never got that, right? So when you're trying to find the perfect bottom, a lot of times you're going to miss your entry, right? So what I like to do is, I like to get in a certain level that I like. And I always tell myself, okay, I'm going to go along here. I'm going to, I actually went spider calls actually here. So I didn't get a perfect entry right there. And then I had to go through this drawdown. However, I did go long on some other index sectors long here, including Russell 2000 and Dow, I believe here. That was just, here on the Dow. And actually, you know why I went long on Dow here with the diamond calls? Is because I saw this thing breaking below it, and that was it. I saw that psychologically a lot of people were kind of panicking, right? Here. That resistance got broken. People are fearing, panicking, so I bought. But when I went long with call options on the Dow there and the Russell, I never really thought that might be the bottom, because nobody truly knows. What really happened was, well, you know what? I'm going to go long here. And if we continue lower to maybe 252 on the diamond, I guess I'm going to buy more at that time. That was my thinking. But at the same time, I know that this market sometimes likes to bounce early. And I didn't want to miss my entry, right? And also, from what I can see, is a lot of people are looking for 300 and 310. And so a lot of times, when a lot of people are looking for that, market might not give it to them. Also, all the analysis that I've done, looking through, how June was playing out and looking through in the past, and my analysis telling me that this is a pretty good level. Not that I know it's going to bottom, but that was a good level for me. And I did the same thing back here, 2019. I don't know if you guys have been following me since then. I've been actually buying these dips, and rolled this thing up there. And so the same thing kind of happened here, right? I was buying those dips in this vicinity, but never perfect bottom. Sometimes I get it, sometimes I don't, but I don't care about that, right? Because you can never get that. That's a problem with a lot of people, is you're trying to find that perfect entry, perfect bottom, and you entirely miss out the entire move. And by the time you really want to go long, well, market is going to make sure it's going to be very, very difficult to chase it up here now. All right, let's go to VIX. So VIX, looks like the resistance there. We came down. Looks like it's even making lower low now. So it looks like you can see it. When you look at a line chart, definitely this was higher high. But this low's finally gotten taken out. So if I go like this, you can see that we made a lower low now. So VIX is coming down. We still haven't filled this gap here. So probably VIX is getting there to fill that gap. Obviously it might pop again or something like that. I never use VIX to try to forecast where the overall market is going to go. You should never try to analyze VIX to figure out where the spider is going. VIX should always be a supplement to what you've already figured out analyzing these indices, right? I know so many people trying to use VIX to time the corrections and time these reversals and entries. I tell you what, you're not gonna be successful, and you're gonna lose a lot of money doing that. So never use VIX to forecast the market. Always use it as a supplement. But yeah, it looks like this gap's still open, so that gap is probably gonna get filled. Maybe another pop or something. I don't know. Maybe it comes back down. But I think overall, it's starting to get. That was that one last kind of pop, I think. Doesn't mean it's gonna have another pop, but probably gonna come down and fill this gap first before popping one more time there. So let's go to gold. So gold is still in this, these kind of long drawn out, potentially flagging pattern, right? We want to continue to give benefit of the doubt to the buyers in the longer term. You can see my long-term moving averages are rising, right? That's a COVID decline. But see, even with the COVID decline, if you understood what's going on with my long-term moving average, you see that my long-term moving average, they've been rising since back in July of 2019. So when they are kind of like going up and down sideways for this long time, even the price was pretty volatile. But once they broke out and my, there's that golden cross, right? My long-term moving average is rising, despite the fact that we saw COVID decline, got back up there. So we want to continue to give benefit of the doubt to the buyers in the long term on gold and silver and miners. And we're just trying to figure out where that high and low is going to be, right? So that's kind of what we're looking at here. Let's go to... Okay, I don't know what happened to my ticker here. It says not entitled. That's not good because I'm trading. So I have to actually... Sorry about that, guys. I can't analyze. I got to call my e-signal, figure out why I'm not entitled. You know what? I can probably analyze it this way. Hold on a second. I can go to other charting software before I call them. I probably have to do it. So let's see. Let's see here. So all right, I pulled it up here. Let's go to, okay, let's do this. So trading view. Yeah, you're not just, it's cut off. See, let's see if I can do it. We'll just have to analyze like that. I can't. Okay, let's see if I can move it. Yeah, we'll just have to all right, so you're not gonna see, you can't see the price, but we'll just analyze a pattern here. So this is $18 here. This is $10. Just keep in mind that's a $5 share, right? So $5 share, $10 share. That's about $18, $19 share. So I've been analyzing this every weekend with you guys, and you guys know that I actually went long here. But because I've been covering it on the video every week. So I first went long. So there's a resistance, right? So I went long as soon as we saw a gap up. And I saw that this was holding up above it. That's my entry. And then when this thing pulled back, retesting the gap area, then I added it. And then when I saw that gap got filled, I added it more. So I went long here, I added it here, and then I added more there. So I was targeting and attacking this vicinity there, right here. So it was $11 a share area. $11 and $10 a share area. So here, so 3 times here and here. So what I was also looking at was potentially that higher low, and we're trying to figure out, and I was analyzing, and you can go back and check back in September all the way to September and October. We're trying to figure out, because we had that higher high on Bitcoin, right? We talked about how, well, the market probably is pulling back to cultivate that higher low, and that was a nice decent sized gap. So once that gap got filled, and that became that higher low, and we're finally breaking out here. We're finally breaking out. And we cultivated that higher high. So we haven't gone up to $17, $18 per share since back in 2019 June. 2019 June here, right? So I'm holding full. I have not closed out a single share. I think I'm up like 80% or something like that, but I haven't closed out a single share. Then I was thinking we might, because you can see if I go to big picture, you see that that's an important pivot. That's a very, very important pivot, because that swing high tanked. That swing high tanked. And then subtly we made higher lows. We're getting back up. And there's a good chance we come back here, 40s or something like that. But I think the next stop is this swing high right here. So that's what? That's 20, something like that. Just a little above it, somewhere in that vicinity, right? So we may hit that and then pull back or something to retest this right here. So we might go up here and come back to retest to 16 and then make a move or something like that. That might possibly what what might be happening on Bitcoin here. So let's continue to give benefit of doubt to the buyers, and I'm holding all of my shares. I'll probably hold it until potentially get to some of these levels there. So there you have it. I gotta call my e-signal and see why I'm not entitled. I probably have to. They probably changed it or something like that. But anyway, so there you have it, guys. So let's see how the market plays out next week. We'll go from there. I'll come back for you guys on Monday. We'll continue with our daily update video. You guys enjoy your weekend, and good luck trading next week.